Welcome back, Sanjiv ji. How are you?
Everything is fine. Good afternoon.
Good afternoon, ji. So I heard that you have recently returned from India. So how was things over there?
Everything was very good there. I was very fortunate to meet my father, who's 91 years and he has been ill for a long time. And when I say fortunate means I was very pleased to see him and in good health. And so, by grace of God, everything is well. Yeah, I came to Delhi. I went to Delhi. There are a lot of pollutions, like everybody knows. But it's very strange how the life is goes on there with hustle and bustles. Still, the life is going on, and people are trying to work hard and get a lot of money and make a lot of money. But it's very surprising. Every time I go there, how this country is being run. I just I don't know how this country is being run, but somehow people are going through that daily routine and trying to, like I said, try to make the ends meet in both ways. Yeah.
Yeah, I think it's kind of more or less like US. I mean, over here we are divided half and half, and over there we have a lot of halves. So we get further divided and further divided and further divided. But anyhow, that will always go on. But I'm glad you're back because there's obviously a lot has changed in America as well. I think everybody's really looking forward to 2022 because not just because that COVID hopefully will be over for real, but more importantly, economy and stock market and real estate, and people want to get back to office and whatnot. And then we have had some major bills passed by the Congress as well in regards to economy as well. So I wanted to ask you, there's a lot of questions going out in the market as to all these new changes that President Biden is bringing. Are they going to impact an average American or only the wealthier Americans?
So very good question, and it goes into a lot of changes that are happening or going to happen soon. So let me go and break it down more specifically. So first that got passed last month was Infrastructure Investment and Jobs Act that got passed into law. It is very good for the country. It has been lagging behind infrastructure. Where is internet? Where is shipping? Or where is other common climate issues? So all these things. It's a need of the hour to get it passed. Finally, President Biden did something great to get it passed. President Obama and all these people tried to do that, but they were not very successful. So it goes to the credit of President Biden to get it done. Now, when it comes to tax provisions inside this act, it's not many provisions are there, only two provisions it affects. It's a employee retention credit for the business owners. If you recall, business owners were able to get employee retention credit equal to 70% of the $10,000 per employee for the first quarter of 2021, second quarter, and third quarter, and fourth quarter, provided the business revenue goes down by less than 20% of the relevant quarter as compared to quarter of 2019. Now, with the passage of this act, they are saying it's not extending the credit for the business owners for the fourth quarter. So you can still take the ERC credit for first quarter one, quarter two, quarter three, but not for quarter four. That's one change. Second change is happening in the bill is cryptocurrency reporting requirements. They want to focus on cryptocurrencies. Cryptocurrencies are several cryptocurrencies, as we know. Everybody's making every month some new cryptocurrencies comes up. It's about I came to know it's about 160 plus cryptocurrencies out there. So it's mind-boggling how many cryptocurrencies are there. It's very difficult, but people are doing investment in those, making money, losing money. So IRS do want to control the flow of investment and calculate the gains. So like we have stocks. For the stock, we have a 1099 broker statement from the brokerage companies. In the same way, cryptocurrency will be reported on some way of forms to the IRS so that we have to report properly on the tax return for our clients. So that's a big change that has been there in the Infrastructure Investment Jobs Act. Another thing that got passed last week in the House was Build Better, Build Back Better Act. Now it does not pass. It's not passed into law as yet. It has to go to Senate, and there are a lot of politics being played in this area. because a lot of things, a lot of provisions are there which Republicans will not like. In fact, few Democrats will not like it. So we have to see what changes will happen there. But what happened in those, in what is there in when it comes to tax provisions in that bill, some of those are first is increasing the SALT deduction. SALT is state income tax and property tax reduction, that increasing the cap of that. Remember, we can only deduct up to $10,000 of state income tax or property tax, or together we cannot increase more than $10,000. They want to increase it from $10,000 to $80,000. That's a welcome relief for all the California taxpayers and others, high income taxpayers, increasing that relief. Whether it will be applicable for higher income earners, we have to see that. We don't know details yet. Then they are going to the second change is they are going to have a surtax on income earners making more than $10 million, 5% surtax on them, and additional 3% surtax on people making more than $25 million. Of course, if they are making so much money, there's nothing wrong in paying that surtax. So that's I think is a wise step too. The third thing that is happening with that is expanding the net investment income tax. That is a net NIIT, which is a surtax of 3.8% that you pay tax on investment income, like interest income, dividend income, rental income. So they want to expand that 3.8% tax on the ordinary and business income, not on W2 income, ordinary and business income for people making more than 400K. Earlier, that was only for net investment income tax, net investment like rental and, like I said, rental interest and dividend. Now they're expanding to business income. So if you have a business owner, you're a business owner getting a K1 from S corporation, LLCs, and your AGI is more than 400K, anything that you got from the K1 will be subject to 3.8% net investment income tax. So that's another bummer that happened. That's increasing the taxes of people making more than 400K. Then there's expanding the child tax credit permanently for one more year. Right? There's a big benefit there. Earned income credit, there's a big benefit there. And they expanded the energy incentive. That, we know President Biden is more towards clean energy, electrical vehicles, and so they want to extend that benefit, that credit for those benefits out there. So those are the few things. Absentees from those bill are the people are waiting to see, oh, whether the high income tax rate will increase from 37% to 39.6%. That never happened. That is not there in this bill, but it will be there in the Senate bill. We don't know yet. Whether there will be a compromise on that, we don't know yet. And the bigger one was the increase in capital gains rate. They want, if you recall, they want to increase the long-term gains from 20% to 40%. So it's not there in this bill that passed the House. What will happen? We don't know in the future. Uh, the question that normally people do ask me is, what do you think? Will this bill passed by the end of this year with the Senate and everything? You never know. The politics are there, and we have seen from our past experiences, even on the 11th hour, they work and they get the things passed. We have seen that on Tax Cuts and Jobs Act on December 31st, 2017. We have seen that President Obama doing the Obamacare on the last day of the year. So things can happen, things will happen. So this is what tax provisions are in both the acts.
Now, friends, those of you guys that are watching this video, I want to remind you, we will have the last webinar of this year. That is going to be happening on December 18th. It's the Saturday. We're going to do it around 10 o'clock in the morning, as always, where Sanjiv will talk about all the things that you can do this year to reduce your taxable income. So if you have not signed up for that webinar, I would strongly recommend that you go to sanjivcpa.com and register for that webinar right now. We already have 100 plus people registered, so maybe another 50, 60 will be able to join, and after that we'll be closing that webinar. So Sanjeev ji, so that's I don't know what to make of that. Looks like one hand is taking, other hand is giving. So it looks like it's another rebalancing act once again.
Yeah, if you're making less than 400K, there are a lot of incentives out there. If you're making more than 400K, other than QBI deduction, which they wanted to take out, which was not there in the bill. So if you are tax savvy, and you have a good CPS, maybe you can still work out and get the best deal for them.
Still manage it. What about healthcare? Nothing changed with healthcare at all,
Nothing with healthcare right this time, and with both this act. Yeah.
right? And once again, I want to remind you guys, and Sanjeev ji, correct me if I'm wrong. In the state of California, we still have healthcare requirement, correct?
Yes, we still have the health mandate. Everybody needs to have a health mandate, whether comes from the employer or not from the employer. So if you're a California resident, you need to have a health mandate, otherwise you're subject to penalties.
Now, Sanjeev ji, I heard this, and maybe you can clarify. I heard they were going to do something about childcare, weren't they?
Yeah, well, just as Child Care with Dominican Rescue Plan Act, they extended the child tax credit, the child and dependent care benefits. Uh, they are looking into it. It's not there in the provision yet, but it will be there some one way or the other. They were talking about paid leave for 4 weeks of paid leave. It's not there in this provision in this act, but we'll see what happens in the future.
Yeah, I think there's many more things that still yet to be clarified. So we'll get to know more in next
Yes,
couple of weeks, right?
see, it was $3.5 trillion. This Build Back Better plan of by President Biden. This is now come down to 1.7 trillion to 1.9 trillion. So we'll see. Still, negotiation is going on. We have to see what happens.
Yeah, and the other change which I was looking forward to it, what they were going to do with the education sector, and looks like no major policy was announced for that.
Not major incentive other than the American Opportunity Credit. They want to expand that one little bit here and there with the limitations on the AGI taken out. But again, we have to see the final guidelines on that, because this has not done into act yet. Yes, they have gone to the Senate and see what happens at the Senate level. There will be a lot of negotiations on this.
So that's all the time I had from Sanjeev ji this evening. I know he had another appointment coming up just here in a couple of minutes. But thank you so much for joining us today, Sanjeev ji. And I will, well, obviously, hopefully, we'll talk before the webinar, and hopefully, we'll have some more updates. But definitely, we'll have a lot of updates for you on December 18th. So once again, if you have not signed up for that webinar, it's free, doesn't cost you anything. You don't have to be our client to join us. You can be anywhere in the world to join us. So please go to sanjivcpa.com and sign up. Once again, thank you so much, Sanjeev ji.
Thank you. Thank you.
Bye bye.